Welcome to the Atomic Real Estate Show, Philadelphia's #1 real estate podcast and a Direct Subs production. Real estate investing is not rocket science, and on our show, we'll delve into best practices with a focus on the small things that add up over time. Please enjoy the authentic, informative, and actionable show with our host, Paul Jagelski.
Welcome to the Atomic Real Estate Show, a podcast dedicated to exploring the world of real estate investing in Philadelphia. Whether you're a seasoned investor or just getting started in the industry, this show is for you. Join us as we dive into the latest trends and insights in the Philadelphia real estate market and hear from experts who are from the area as they break down their knowledge and experiences with investing in this dynamic city. This podcast is a Direct Subs production. Please visit them at directsubs.com, connecting investors and contractors throughout the greater Philadelphia area. Sit back, relax, and let's explore the world of this atomic real estate market together. I'm Paul Jagelski, your host, and today we have the pleasure of diving into hard money loans with Antonio Campanelli. Antonio is the Director of Investor Relations at Fund That Flip. Antonio, thanks for joining us today, man. Please introduce yourself to our listeners.
Yeah, thanks, Paul. Absolute pleasure. Thanks for having me. As you mentioned, my name is Antonio Campanelli. I'm an investor relations director at Fund That Flip. Kind of dive a little bit more into what that fancy title actually means, but essentially, whatever that means. Everybody's got a fun title these days. Essentially, what that means is I work with investors on our platform. On the passive investing side. So we'll break that down a little bit more, I'm sure, throughout the episode. But high level, Fund That Flip, we originate construction loans for real estate investors or developers. And we have a little bit of a unique platform. We're a two-sided marketplace where we not only originate loans and lend to developers, as I mentioned, but then we're also raising capital on the back end. Through institutional capital partners. But I think what makes us most interesting is that we have a crowdfunding platform where accredited investors can invest directly in the real estate deals that we're originating. So yeah, excited to chat with you today, Paul, and talk about, get into the weeds and crunch some numbers and hopefully hopefully people can take away something new today.
Dude, you guys are like a one-stop full funding brokerage, no matter what angle you want to come at it from an investor's point of view.
Yeah, so really what we're trying to be a marketplace for all things real estate investing. So company is about 8 years old. And to your point, whether an investor or developer is looking for capital for any further construction projects, whether it's a rehab, we do a lot of new construction origination. And again, on the rehab side, whether it's cosmetic or something a little bit more involved, like a full gut rehab. We want to be that one-stop shop for real estate developers, real estate investors. To come to us, leverage our capital. We originate construction loans about 6 to 12 months. We work very closely with the real estate developers and listen to what's important to them, right? Because there's a lot of lenders out there. But so most importantly, understand what's important to the developer and try to line up that capital.
Dude, that's awesome. So I'm a new investor. I think I've identified a property. I don't have the capital to do this. So what's my steps? Like, start me off brand new. What am I doing here? Do you take brand new? Yeah. Is that even a problem, or is that a problem?
We don't take brand new investors in the sense that they've never done a flip or a rehab before. I think I learned this too, and I'm sure you learned it too, Paul. You learn a lot when you're doing your first investment deal, even if it's whether it's like a really what we call like something really cosmetic, painting the walls, replacing the floors, maybe updating a kitchen or a bathroom. To the other end of the spectrum, which we're, maybe an investor is looking for a shell, something that maybe they're going to add on to, fully got the whole thing, new mechanicals, plumbing, electric. So wherever you're at in that spectrum, you still learn a lot on your first deal. So to answer your question, we don't work with first time investors, but if anyone is interested in maybe being connected to someone who might take a chance on a first time investor, I'd be happy to pass my information along. We can get there, but primarily for Fund That Flip, we're working with real estate investors who have some experience in the space. they come to us with a deal. They might say, hey, Antonio, like found this great deal in North Philadelphia or in Fishtown or out in the suburbs, South Jersey, wherever, right? So at that point, we understand from the developer, what the purchase price, the rehab that they believe that they're going to be putting into the property, the rehab amount, and then we understand the ARV, the after repair value, so that we can do an underwrite to confirm that the deal looks profitable. And then during that, this is really high level, right? So like during the closing process, we'll do document intake, collect some docs from the real estate investor, and we do our best to package up the loan as quickly and efficiently as possible and get them the capital they need for their project.
Dude, that's awesome. So is this capital being released in phases all at once? How does that work for the investor side of it?
Yeah, it's a good question. So the investor, the developer, is going to bring some equity to the table, right? We're a two-sided marketplace, so we have to look out for the best interest in our borrowers, but we also have to look out for the best interest in our lenders on the platform. And I can, so I can kind of get to that.
Piece to be sitting on.
It's fun. I mean, we have a lot of autonomy because we're originating these loans, but we have to make sure that the loans that we're originating, we have to make sure that there's an appetite for them on the back end. So I think we'll probably dive into that a little bit more in depth as the conversation goes on. But yeah, we'd like the developer to have a plan, have an idea of what they're looking to purchase, be able to explain to us like what their exit strategy is, whether they're going to rent and refi and hold on to this property, if they're looking to build some long-term wealth, or maybe they've identified a neighborhood that they think is ripe for a fix and flip method. So a lot of, I think we'll delve into this a little bit more as we talk, but we have a really diverse capital stack, and we're able to say yes to a lot of deals because we have the appetite of the institutional capital partners and then the other folks on our platform. So we think that diverse capital stack helps us find a home. And as long as we believe in a real estate deal and it's something that we think our lenders would want to participate with, and we believe in the lender, we then start to build that relationship and then move forward. And hopefully we're that reoccurring lender for that developer and try to make their lives easier as our relationship continues.
Dude, that's awesome. And I like how you keep using relationship because you're making connections for individuals, helping them through the process out of it, and really breaking it down so that, you're not making those mistakes along the way, or you're dropping the ball somewhere that can delay something. And we all know delays are money. Dude, that relationship is awesome. Building connections in this industry is so key. We've heard it from almost every guest. Like, you got to have that connection, and you guys are kind of that atom that you're going to just spin all those connections around yourself to make sure everybody's perfectly aligned.
Yeah, Paul, I couldn't agree more. I mean, you're financing your lender. If you are leveraging someone else's capital, it's just it is one very important part of your real estate network. I mean, as you know, it's just one piece of the puzzle, right? But it's an important piece. So ideally, you would be working with a lender who's listening to your feedback, who's trying to make the process as straightforward as possible, and who, I mean, you learn. I often say you learn a lot on your first project, but I think you also learn a lot as you continue to work with someone through a continued relationship. So I've had some instances in the past where we wrote a loan for a developer, and they come back to me and they say, "Hey, that was perfect, but I wish that we could have done this." And maybe they're on the back end of that loan, and maybe their request is, I wish we wrapped in a little bit more of an interest reserve, so I didn't have to come out of pocket, or I wish we looked at the loan from this angle, and we would have accounted for this. And we have a lot of flexibility and optionality in our loan. So I think, like, as to your point, as you build a relationship, you get to know someone a little bit more closely, and we like to listen and consider feedback. And a lot of lenders out there. So the way that you can really differentiate yourself in this space is listening and trying to be a strong communicator. So yeah, relationships are, you nailed it, man. Like they're everything.
Yep. And now you said through that you can do anything from a cosmetic all the way up into an institutional with you guys. So the size of the project, it kind of doesn't really have a boundary. It's just whether or not the numbers work and you're working with professional out of it, correct?
Yeah, I think I'll say we like to try to understand the developer's plan from the get-go. And if a developer's done a few fix and flips in the past, or a few rehabs that have mostly been cosmetic, We might not take the leap of faith to lend to do 5 or 10 new single family construction loans. But yeah, absolutely. I think we want to make sure we want to have an understanding that they've done something somewhat similar in the past. But yeah, I think the nice thing about the diverse capital stack and that we're raising institutional capital, but then we also have the crowdfunding platform. The nice thing is we do have the ability to write all sorts of different loans. We've done some land bridge deals in the past. Like I mentioned, rehabs from cosmetic through full gut, single family home new construction. So the company is called Fund That Flip because originally that's what we were doing, right? We were funding flips, but at this point, I mean, we're lending for rehab. A lot of folks leverage the BRRRR strategy, which I've heard you mention on previous podcasts before, on previous episodes. So I'm sure your listeners are probably familiar with that at this point. If they're not, buy, rehab, refinance, rent, repeat. So we have folks who have all sorts of different strategies. And Paul, one thing I love that you mentioned on one of your previous podcasts is one of your advice in the past was kind of find your lane. I think you mentioned there's like hundreds of ways to make money, right? So figure out what works for you. Try not to deviate too much from it. I think that's really, really good advice for developers and real estate investors getting started.
Yeah, dude, I can't tell you. I mean, so I'm an investor, quote unquote, on myself, and I'm sitting here right now antsy because my lane right now is closed. What I'm looking for, it's not on the market right now. And I have to keep telling myself, don't try and stretch to do this or that just because you see other people doing it and they're doing it well and they're making money off of it. I don't do that. So
to your point, right? So to your point, you said you've done, I think you mentioned you had a couple duplexes in a single family right now in your portfolio, right? So I mean, I think there's something to be said for if you don't necessarily have all the contractors lined up that you might for a full gut rehab. You can it could be a little bit of a more difficult experience if you're trying to line up these contractors on the fly. I've seen it. So I'm not telling folks not to take chances, but if you are going to evolve and do something a little bit different, try to line up, to your point, those relationships ahead of time, speak with a lender, whether it's us or someone else in town, get an understanding of, what kind of documents you're going to have lined up before the closing process. Because as you know, Paul, even right now we're in a rising interest rate environment and things are staying on the market a little bit longer. The deals that are listed on MLS, if it's truly a deal, not going to last long. And same with off-market deals, right? There's still a lot of activity going on in Philadelphia. Drive up and down any corridor in the city, you see cranes, you see a lot of construction going on. So if anyone tells you that construction has stopped here or that it's slowed down, I haven't seen it. I understand that, we're in a little bit of a different environment where prices are leveling off, but to your point, it's still not necessarily easy to find a good deal. And it probably takes a lot of self-control to not want to jump and do the next strategy. Cause that you've probably learned a lot doing this strategy now a few times, is my best guess.
So one of my strategies that I'm looking into, which is actually something that you mentioned, which I want to get more information, which is kind of my little side of my personal on this one. You mentioned crowdfunding. And so tell me a little bit more about crowdfunding, what it is, how it works, returns, all that kind of good stuff.
Sure. Yeah. So that's like one of the most fun buzzwords going on in all of business or tech right now, right? Like everyone's crowdfunding, right? No. So all jokes aside, company's about 8 years old, and our founder and CEO Matt Rodak, one of his core philosophies was there was legislation involved in the late or early 2010s that essentially allowed the ability for folks to crowdfund and participate in real estate investing online. So he and a lot of other folks way smarter than me decided that they were going to go out and start companies and try to leverage a crowdfunding platform. Like a lot of things, an idea is easy, but execution is difficult.
Oh God,
So, right. So, proud to say that we've really grown our platform tremendously over the last 8 or 9 years since the company's been founded, since inception. But what we do is we offer the ability for accredited investors to participate in these loans that we have on the platform. So we'll originate a loan for Mr. or Mrs. Real Estate Investor, Mr. or Mrs. Developer, right? And then we'll, in lots of instances, we'll open that up on the platform and we'll open it up for investment. And what that means is accredited investors have the ability to log onto our platform, create an account, link their bank account, and invest as little as $5,000 into any individual real estate project, or $1,000 into our fund series. And I can kind of explain the difference of those two products here in a second. But what we're doing is, we have the active investors, the real estate investors who are rehabilitating homes and building wealth in the community. But then we also have the passive investors, maybe the folks who say, hey, I do okay. I've saved up some money. I've set aside. I've always been interested in real estate investing, but or investing in real estate, I should say. But I don't necessarily know if I want to, quit my day job and get out there and swing a hammer, or take a leap of faith to do it myself. So what we allow is the opportunity for these folks to, we call it passively invest, where we do the underwriting. We take a first lien position through the mortgage for whatever construction project that we're originating and that we're funding. And then we open it up and allow the investors to say, hey, I like those 10, 11, 12% returns that I could get on a monthly basis by investing my capital in this project. So, we try on the platform to give all pertinent information that's necessary. And everything that's simple and straightforward, from, the purchase price to the loan term, your interest rate, all that fun stuff, to, we give you information about the developer and his or her performance in the past, how many loans they've done with us, what types of loans they typically do, what types of, we like truly dozens, if not hundreds of data points on the platform, so that you can do your due diligence, and we do our underwriting, pass along appraisal information and whatnot. And it really, at that point, it's up to that investor who would like to invest in these real estate deals to sit down and say, hey, maybe I like this project for these reasons. Maybe I like this project for these reasons. Maybe I want to invest in one of our funds rather than investing in a specific real estate project. So we have a pretty cool marketplace going on at Fund That Flip, and we have thousands of accredited investors who are currently investing on the platform.
Dude, that's awesome. Because as I said, this is something I've been looking into, and most of them are like, yeah, just send us your money and we'll send you the report at the end of the month that you made money.
Yeah.
We promise that. And you never know, like, is my money going to Dallas? Is it going to North Carolina? Is it going out to Tennessee? Or are you just literally taking my money and sending me a fake return? So the fact that you are so transparent, I mean, down to the fact of how many deals this previous investor has done and what they've looked like, I mean, that is phenomenal information.
Appreciate that, Paul. You mentioned transparent, and like, that's truly one of our core values is transparency. So as much information as we can give on any specific project, we think we owe it to the passive, the accredited investors. I think we think we owe it to them to put that information out there.
Yeah, dude. And I also got to say, I got lost in your website. Well, we got connected, and yes, I did my little homework on you, and I went to your website out of it. And dude, I got lost in a good way, as in, like, I kept clicking for more information because there was just, it's there. Like, you guys don't hide it. It's not something that is what I got to go make an appointment and ask questions. No, you give us information straight up front. Which is why I'm so excited to talk to you today, because as I say, this is awesome. This is such a cool platform that I don't think a lot of people realize is out there for them. And the fact that, again, you're coming from all angles out of it, if you could fit to anybody's lane, and you can possibly allow them to deviate a little bit over, so it's not that scary, and they can still take risk and still learn and still have that return at the back end out of it.
Yeah, I think to your point, it's just there's a lot of ways to invest out there, right? And I think historically, if you wanted to privately invest in real estate, we used to call those the country club deals, or folks you go out golfing with the developer that you agree to terms, you shake on it. So for folks who aren't interested in doing that and they want to take their time, do their homework behind the scenes, I encourage them to hop onto our platform at fundthatflip.com, and you can actually see the deals that we have open for investment without creating an account. But if you do want to dive into any deal and do your due diligence and look through our underwriting process, creating an account takes a few minutes. And to your point, Paul, there's a lot of information in there, so you can spend an hour pretty quick clicking around and looking at what we have open for investment.
So I know the first question that somebody's going to come right to us. All right, great. I gave you, so let's say I have $10,000 to invest in 2 different projects.
Sure.
One project, it will have probably a guaranteed deadline type time frame of when the project's supposed to be done. But the other one, I just kind of want to leave open air. So how long do I have to keep it invested? Is that up to me? Is that up to you? Is that up to the project?
Yeah, great question. So that's important, right? Because especially right now where we're in called like a rising interest rate environment, or folks aren't quite sure like what's around the corner, a fixed term length is important to some folks. So as I mentioned earlier, we have the individual projects that we open for investment on the platform. We're generally writing 6 to 12 month construction loans, but we understand that some folks might want to have a little bit less exposure, a little bit less of a length. So we have projects that are open for investment that are partially started, partially completed. You might see some projects on the platform that the work has already been completed. And we know that because we have third-party inspections that are done where a photo inspection has been completed when the developer requests a draw. So you're able to kind of follow along with the project and see, oh, look, that developer just took a draw. They finished they got the rough-ins done and the plumbing, rough-ins for HVAC. They're about to get it, we're about to move on to insulation, drywall, what have you, right? So we allow these project updates. We show these project updates on the platform, and getting a little bit long-winded here, but essentially we have different term lengths available. Some the construction loan matures in 2 or 3 months, so you're kind of towards the back end of the project. Yep. Some of them might have just recently started, so you might be looking at a 10 to 12 month investment. At the end of the day, it does depend on when the developer does wrap up the project and either sell it or refi out. So the term length is it's our best guess to when that developer will finish that project. If you are looking for something that is definitely a little bit more fixed, we have a couple of different funds that are open for investment. Without going too in the weeds, because folks can kind of log on and click around, we have 2 funds. One is a pre-funding note fund. It's essentially a line of capital that we use to originate loans during the closing process. And then the other fund available is our residential bridge note fund, RBNF. This is essentially if you don't want to, let's say you really want to be passive, right? And you don't want to click through different projects and try to understand all the underwriting process, and you kind of just, you believe in the company, you believe in the concept, you want to invest without picking a specific project. These 2 funds are great because they're essentially highly diversified funds that allows you to invest fractionally in a bunch of different projects. And we offer these with in a fixed term length, meaning if it says it's a 6 or a 12 month term, you invest the capital, we'll pay you monthly interest payments throughout the duration of your investment. And then when that term is over, the capital is then returned to the investor. So to your point, we try to look at this from all angles. So we want to have investments opened if folks are looking to maybe invest capital for a few months, or let's say someone's had some money set aside and they're good committing to a 10 or 12 month investment. We have lots of different options available.
When are we going public? Come on, let's go. I want some IPOs.
Hopefully soon. I
didn't mean to put you on the spot.
Well, as far as like forward-looking statements, I mean, we don't have. It is our goal and our dream to hopefully one day have the ability to go public. We have had 2 fundraising rounds in the past, both a Series A and a Series B, that have helped infuse capital into the company and helped us grow. We've already had some profitable years, even though we are, still what we consider a late stage startup. And that the goal, Paul, is eventually to hopefully be able to do that. So
I'm in on the fundraising. Don't worry, you call me. I'll help you as much as I possibly can on my personals out of that one.
I'll give you a shout. I'll give you a shout when it's that time.
Yeah, please do. So you work with tons of investors. I mean, broad spectrum. Nothing really stops any of that spectrum out of it. But what I want to know are what are the commonalities between these super successful investors? What are their habits? What are they doing for you on a daily, weekly, monthly basis that continues to bring their business back to you?
You're talking about specifically the folks out there doing the work, right? The real estate developers. I love this question, Paul. I live in Philadelphia. I work in Philadelphia right now. As you can see in my background, I'm working out of my one of my many home offices. This is the corner of my kitchen. I mean, we live here, we invest here because we like it here, right? So I've gotten to know prior to my time as an investor relations director at Fund That Flip. I was for 2 years I was overseeing our loan origination efforts here in Philadelphia, but I oversaw loan origination efforts in Pennsylvania, New Jersey, and Delaware. And so I've gotten, I've had the pleasure of working with a lot of real estate investors and developers over the last couple of years.
Pleasure's a nice way to say that.
No, it's never a dull moment, man. It's a fun industry. You'll come away with some fun stories if you do that long enough. But no, I mean, all jokes aside, there are definitely things that are repeatable that can be done, and a lot of commonalities from successful real estate investors. I would say first and foremost, the most successful real estate investors and developers, they do their homework. They understand their strategy. They go into an investment having considered nearly everything, right? Like they have their legal entity set up. They have, a basic understanding they have a very good understanding, of the work that needs to be completed. They're collecting bids throughout the closing process, and they're adjusting their budget and their scope of work accordingly. They have a wide network of, again, the money, the lending is just one piece of the puzzle. If anyone's real estate investing or developing in Philadelphia and they're interested in learning more, I hope they reach out to us. But I would encourage you to reach out to multiple lenders and have an understanding of, what kinds of different programs are out there. And just as Paul, as you know from your experience, there, you really should have multiple touch points for anything you need, right? Whether it's wholesalers, lenders, and whatnot. So yeah, just making sure that you have those relationships lined up. As you mentioned, the MLS is a great tool, but wholesalers and finding projects off market is also a wonderful tool. So I think preparedness is like as obvious as that seems. I think having a plan A and a plan B and having all your ducks in a row and all your relationships and all your resources lined up, I think it's very, very crucial. And then I think making sure that you don't overextend yourself on your first couple of projects. It's contingencies are always. I can't stress how important it is to have a contingency budget. And if you're going to do a project and you think, I think I can do that work for 15 or 20,000, maybe give yourself a little bit of a longer leash and plan for some other contingent. We always joke that you don't necessarily know what you're going to find behind the walls.
Yes, nobody has X-ray vision. We're not Superman over here. No, I'm happy you said that budget part, because I tell people, listen, if you plan on a bathroom costing you 20 grand, have 35,000 sitting off. I don't need 15 extra grand. Be happy that you do, because if it's less,
right?
Hey, you made money technically, right? You didn't spend it that you expected to spend. But when you underestimate it and you say, no, I can do it for 18 and it's coming out to 25, where are you picking up that extra 7? That's delays. That's more time. Now that 7 all of a sudden becomes 12 and so forth and so forth. So, dude, that's so smart. You got to tell people that. This is kind of a loaded question, because I see this trend and I don't know if the actual facts are going to back this up. But you mentioned a lot of qualities there and habits that tend to go more with the female than the male side of things. I'm seeing more and more female investors, because they're prepared. They're very detail oriented. They have no problem telling anybody yes or no, especially no out of it. So is that a trend you're seeing? Are you seeing more and more females coming on?
Oh, absolutely. I can think of a handful off the top of my head that I've done multiple projects with, or that we've had a lasting relationship now here, just in Philadelphia and just in the surrounding area. It's definitely it's more and more. There are more women out there participating in real estate from all sides, and developers, real estate investors are that very, very much in those two lanes as well. And to your point, I mean, some of our largest borrowers that fund that flip, some of them are women, and we continue to see them grow and be a larger piece of the real estate space. So I think it's a great trend. I think it's wonderful. I think historically, I mean, I think this isn't a secret, right? Historically, real estate was at one point a male-dominated industry, and we're seeing it move closer and closer to equal men and equal women participating in lots of different parts. So, and to your point, I mean, I think maybe you're saying it a little tongue in cheek, but maybe not. I think it's no secret that sometimes women are better prepared than us men out there, and they do their homework, and they have contingency set up where maybe men, like, they see a buddy do it, they're like, yeah, I can do that. They kind of do it off the cuff. So absolutely, man. Absolutely.
Yeah. As I say, it's a trend I've been seeing more and more, especially as this podcast goes on. The more and more connections that we make, it's phenomenal to me, and it's fascinating at the same time, because as you said, they've got qualities that make for really good investors. So yeah, we're all for it. We encourage it. We love seeing it. Now,
Absolutely.
anybody that's coming to you, you said preparedness is one of your big key things. What documents am I bringing to you to start as an investor looking for money from you? Not putting my money in, but looking for money from you.
Yeah, good question, Paul. If you're looking for a loan, at the very least, ourselves and lots of other lenders, they lend to entities, right? So we're lending to LLCs, to corporations. We're not actually lending to the individual. That's quite common in the hard and private money lending space. So, if you haven't done it already on any of your previous projects, you're going to need, all your LLC docs, and then anything that's associated with that, you're going to need to show some liquidity and show us that you have some liquidity to get through the project, and you can kind of expand on that and the draw process and how that all works. But these are typical documents that you'll have to have ready in the lending space. Some of the other obvious ones are, we're gonna confirm that you've done this before. We're gonna confirm that you have some experience. So we might ask for some HUDs, or at the very least some pictures and whatnot. We're usually ask for a little bit more pictures. But we can use things like that to help identify and help confirm that the work's been done. But we'll want to see HUDs and confirm experience. So we're gonna be looking for LLC docs. We're gonna be looking to confirm experience. We are going to be looking for your scope of work and your budget, right? Like, it's great that, you're doing the project and you tell us, hey, I'm going to do it. It's going to be a $50,000 rehab. That's great, but we want to see a budget broken down line by line so that we understand where that money's going. A, so that we know how to underwrite it correctly. And then B, so that when it comes time for the draw process and the inspection's done, we get those photos from the third party inspector that shows that, the kitchen's been completed, and we can go to your scope of work and budget and say, okay, yeah, they said that they were going to spend $10,000 on those cabinets and, appliances and whatever materials were in the kitchen. So now we know to reimburse that money. So we try very hard to not ask for additional documents that feel unnecessary. I don't know if you're familiar, Paul, but there are some lenders out there who are going to ask for personal financial statements, W-2s, all sorts of things like that. We consider ourselves an asset-based lender. So first and foremost, we want to make sure that the developer has the experience, but then we're leaning into the asset itself. Is it profitable? Does it underwrite correctly? So on and so forth. So we're not going to ask for, the W-2s and the personal financial statements. We more so are curious about the specific project and confirming that the developer has done it in the past. So I think we request maybe 8 documents all in all, which hopefully isn't too big of a heavy. Yeah, we try to make it as simple and straightforward as possible. We really ask for the documents that are important for the specific project itself. And as you build a relationship, to your point earlier, we don't need to confirm your experience for the second and the third project. We've already done that. So hopefully, in theory, it gets easier moving forward as you build a relationship, as you said.
Yeah. You mentioned something quickly in there, and I think you've now mentioned it twice quickly both times. And it's something I picked up on because I think it's such a cool layer of security. A third-party inspector who's actually going to these places to confirm that materials are being bought that said were being purchased, and the places are actually being put together the way that they said they're being put together.
Sure.
Explain to me why you guys decided to do that, because I'm sure I know why. Because I've heard my horror stories out of it, but I would love to hear from your side of it.
Yeah, so it's the easiest and the fairest way for everyone involved, whether it's the developer, the lender, or the maybe the passive investor who's investing on our platform, to know that the work is being completed as promised, right? We try to make this process as easy as possible, but if Mr. or Mrs. real estate developer is ready for a draw, they'll call us or they'll get in touch with our servicing team and say, hey, I've advanced the project and I've gotten done, pick a couple of trades, Paul, right? Like I just wrapped up framing. I've got all my mechanicals done, just past, ready to move on to insulation, drywall, what have you, whatever's next. But at this point, I want to take a draw, and a draw is essentially your lender reimbursing you for the work that's been completed. So the way that we know that that's been completed is we get a third party inspection done. It actually sounds a little bit more involved, a little bit fancier than it probably is. Essentially, a real estate professional goes out there, and this inspector, it's simply a photo inspection. They take pictures of what's been done, so that we have proof that the work's been done, and we're able to confirm against their budget what's been completed. Usually a fairly easy process, takes a few business days from the time the inspector shows up to the time that we then reimburse that developer via the draw process. So it's really just the simplest and fairest way for us to confirm the work's been done so that all parties are content, whether it's the person investing in the project, the person doing the work, the lender. It's pretty common in lending.
Dude, I like it. Mitigate those risks on all ends, especially on that third party part, not actually one of your people.
Right.
But you said a key term in there as well, reimbursing. A lot of investors believe through these strategies, I get the money up front and I can just, hey, thanks for 150 grand. Now I can go do what I need. And you mentioned it, and I didn't pick up on it until now that I'm saying this out loud, but you mentioned it actually earlier too, where you have to have the funds ready for the projected project that you're doing, because you will just reimburse. Right. You're not actually buying and purchasing and supplying the funds that way.
Yeah, you're spot on, Paul. A lot of times, whenever I speak to first-time investors, a lot of them are excited and they're ready to get going, and I love it. Right, like you need that energy in real estate. But I actually learned a lot of folks don't realize that you not only do you need your capital, your equity for the beginning of the project, whatever your portion of the down payment is, your closing costs and fees and everything associated. You also need a little bit of a nest egg of capital to get the construction started. So even if you have a construction loan and the lender has promised you $50,000 or whatever towards the work being done, you need at least a portion of that capital set aside to get started. Then you use that capital. We confirm the work's been done. We reimburse you, and you can recycle that capital so that you're leveraging our money, and you don't have to have the entire $50,000 set aside. But to your point, I think that's a common misconception, especially right now when things are a little tighter than they were maybe 8 to 12 months ago, where you'd be hard pressed to find a lender who's going to quote unquote advance you the capital. You're going to have to.
Well, I'm glad you brought up our current financial state, because there's a recent bank crash a couple of days ago, about a week ago. So how are you guys taking what's happening in the market right now, especially in the financial world, taking the real estate market, which is kind of in its, ups, downs. Everybody's got crystal balls and nobody actually has a crystal ball. So nobody really knows where it's going. But how are you guys fighting that right now? Like what's that battle look like on your end? Is there a battle? Or are you guys just pushing forward because you're solid business going?
That's Paul, that's such a great question. Like, it's no secret that things have changed a little bit, that the environment's changed in the last 6 to 8 months, and the economy's changed, right? And we're in this really unique scenario where we have some economists saying, oh, look at this jobs report, the economy's never been stronger. And then you've got the doomsday preppers over here who are like, the economy's going to blow up tomorrow, and like all these banks are failing. And like, Paul, the reality is like we're somewhere in between, right? Like, and it's a moving target. So what we're doing on our end to be a little bit more financially prudent is we're just taking, during the underwriting process, we're dotting our I's, we're crossing our T's, we're spending a little bit more time during the underwriting process. Lenders across the board are being a little bit more conservative than they were 8 to 12 months, but the fact remains that if you have a real estate project that you're capable of doing, you've done it before, you show us a little bit of experience, you find a profitable real estate project that underwrites, it's not impossible to find the money right now to do that project. There are lenders like us, Fund That Flip, who this is our value proposition, right? Like, this is what we do. We originate loans for real estate investors, and we're not going to stop lending because that's our business model. So as long as it's still a sound loan and everything checks out and underwrites, we're still originating these loans. Are we being a little bit more conservative than 8 to 12 months? Sure. I mean, we owe it to ourselves and to our investors on our platform to be financially prudent and be a little bit more conservative and hedge risk and de-risk in these scenarios. But the money's still out there. If you're an experienced investor, or even if you've done a couple of projects or 1 or 2 projects, the money's out there, and it's really just a matter of finding the lender that works best for your scenario.
Yeah, man. I mean, kind of full circle on our whole conversation here. You stay in your lanes, right? All right, my lane's closed. I got to find a lane that I can still do something that I can feel safe and comfortable. Well, people like me are going to look for companies like yours right now, where for the next 6 to 12 months, I can put my money. It's going to be safe. It's not going to be in a bank. It's still making money. It's still working within the industry. And then you've got the savvy investors out there that, we said it, there's still deals on the market. If your lane's open, man, you can go fast.
Sure.
So yeah, I could see, my crystal ball that I have here that's non-existent. Yeah, man, I could see this being a good time for you guys, to be honest. You good for you. Keep strong, stay strong to your morals like you are, stay strong to your pillars like you are. And yeah, man, as I say, when you go in public.
Well, I don't with my crystal ball, I can't quite, to your point. Everybody's got a crystal ball, right? It's funny, like we joke about it. Everybody seems like not everybody, but a lot of folks think they know exactly what's going to happen tomorrow. Paul, the best we can do is try to make good decisions on a daily basis. And to your point, I mean, if your lane seems like it's closing, or it seems like it's harder to find those opportunities, my advice to folks out there is stay diligent. Keep doing what you've been doing. Keep looking for those deals. And sometimes you might need to expand your lane or change lanes, but just make sure you're doing your due diligence ahead of time and lining up everything that's necessary before trying a new strategy.
Dude, you've hit so many nails on the head today. I love it. I absolutely love it. This is something that as I say, I'm taking notes here and I'm learning. I'm
love
learning
it, man.
on my end out of it. So this is awesome, dude. This is so cool. You guys have a great platform, a great strategy, some amazing pillars to lean on out of it. It seems like your leadership is phenomenal on top of it as well. And to me, that transparency part is something that I can never put a phrase, a word, money, nothing can ever describe what that means to me. The fact that you guys are so transparent with everything that you do, you're not hiding anything, is awesome. I mean, that's just such a great business model. And it goes right back to that building relations. You be transparent, build relations, let somebody make the decision if this is right for them or not.
Yeah, wholeheartedly agree. I think where we take a lot of pride is whether you're looking for a loan, and if you're a real estate developer or you're looking to invest in these loans, like our mantra at Fund That Flip is very much transparency. Like we always have someone available to talk to, rather than, we think technology is wonderful, right? Like we leverage technology for our platform in so many different areas of our business. That being said, you cannot replace actually working with a human being who's willing to listen and like help you talk through these scenarios. And so that we see a lot of lenders moving more and more in the direction of like automated intake, and basically like there are some lenders out there where you can do it all behind the laptop if you so choose, and like that's wonderful. And we want to have the ability to do that as well, but we also want to be the lender that someone is available to take a call, someone is available to meet for coffee, go on a meeting, to chat through your next real estate project. So part of our strategy is, we have different folks in different markets that we do a lot of business in. I live here in Philadelphia, as I mentioned, and we have other folks who service the Philadelphia market area. But then, even if you're listening to this podcast in a different city, like we call them territory managers who are out there and willing to meet you at your construction project or talk through your next deal, grab coffee, catch up, what have you. So, as much as we love and we try to leverage technology, you just can't replace the communication tool and actually having someone to speak to. And that goes for the platform too. If folks want to invest on the platform, you can create an account. You really can do it all online. But part of my role and what I do on a daily basis is help help the investors on the platform understand the differences between their different products, answer any questions they might have, try to make sure that they're having a good experience through their investing.
And ask them for more.
We try, man. We try hard.
Well, that's what I'm going to start telling everybody to do is, hey, the first investor that comes to me is like, I don't know what to do right now. I'm going to say, go to Fund That Flip and figure out if that's where you want to put your money right now, because that's where I'm looking into. But dude, with all of this, especially with this most recent economy and all of that craziness that's going on, how do you decompress at the end of your day? How are you just kind of going, woosah?
Me personally,
Yeah,
I'm going out for a walk. I'm getting some fresh air. I'm try to spend some time with my family, my friends, my girlfriend. We all love real estate, right? Like that's why we're involved in it. There's a lot of different industries that we can pick and choose. Myself and you, Paul, and anybody listening to this podcast. I mean, we're here for a reason, right? But I try to decompress. I'm a pretty simple guy. I like to relax, spend time with my loved ones, love sports, love big Sixers, big Eagles guy. That Phillies run this past year was a ton of fun too. Love soccer. Played up until recently when I unfortunately did some ligament to my knee, but now I'm on the mend and I'm on recovery and I'm back to walking again after my knee surgery. So that's how I decompress, man. It's important though to decompress and to have I think it's important to have some other hobbies and be able to decompress and take a deep breath, and because we're really, we're living through a really interesting turn in the real estate industry, and a lot of folks are going to come out winners and come out stronger. But it's, we've definitely seen some trials and tribulations here over the last year or so, and I think a lot of folks have, it's never a boring industry. I promise you that. If you want to be in an industry that's not boring and you're considering real estate, there you go. It's like never a boring industry. I promise you that.
Go to data entry for Excel sheets or something, but not real estate.
Oh yeah. Oh yeah. If you are not interested in learning something new on a regular basis, not the industry for you.
Yeah, no, dude, I agree. That's why I keep saying, like, I'm a new investor, and I've been doing this now for 4 years, and it's still going to be new for me until I hit about 30 years when I retire out of it.
How often you learn something new? I mean, you have a really cool gig here, whereas you're doing this, and I know you wear a lot of different hats, right? I do. In addition to your real estate investing, you have the podcast. I know you wear the dad hat, which is a full-time job in itself.
Yeah.
So I think you probably learn more than I do having these conversations on a daily basis, just getting to speak to so many different folks in the industry. And Philadelphia really is a great real estate market. And you hear all this outside noise about Philadelphia, the city as a whole, what direction it's heading in. There's really a lot of great things being done here right now in the construction and the real estate spaces, and a lot of cool little unique startups, and a lot of folks trying to do different things. And we really do have a vibrant real estate community here in the Philly area.
I got a real quick question that just kind of popped to my head.
Sure.
Do you guys do kind of commercial loans? Like, say if I wanted to start a business, not McDonald's, I want to start my own coffee shop. Is that something that you can get into?
We're residential real estate is our bread and butter.
Okay.
We'll do like the small multifamilies up to, call it 2 through 4 units, and in the past we do have the ability to do some slightly larger multifamily construction loans. But residential, I think we still believe that there's a fundamental shortage of safe, affordable, economical housing available for folks who are looking to buy their first home, or maybe their second home. Obviously, we still believe, like, fundamentally, and a lot of folks believe this, a lot of it still looks like there is a serious shortage in housing out there. Home ownership rates continue to decrease, meaning less and less folks own their primary home than in the past. And I mean, the data's out there. It's I think if you zoom out, nobody. You joked about the crystal ball earlier, Paul. Like, no one knows what's going to happen with interest rates in the next few months. You can make an educated guess. There are economists all over the place who have different projections and whatnot. I think if you zoom out and you look at this holistically, and you look at the economics, I think there's a fundamental shortage of homes available, and we still believe in the residential real estate space. So we focus just on that, the residential space.
Hey, goes right back to it. Stay in your lane until you can figure out how to deviate.
Right. Exactly. Yeah. Exactly.
Dude, that's awesome.
Exactly. We're staying in our lane too. Exactly.
Yeah. And I mean, hey, why not live what you tell? And then once you can figure out, hey, can I just kind of deviate over and make my lane a little bit wider? We can bring that in there. Sure. But real quick on the economics of Philadelphia, tell me what you're seeing with the overall development on it, the money being spent, and all that kind of fun stuff. Dive into quick little numbers for us.
Yeah. I mean, high level, definitely encourage everyone to do their due diligence. But if you're thinking about, there are certain neighborhoods that seem to be holding their appreciation a little bit better than others. That's why I keep stressing to do your due diligence and really do your research before you don't just do a deal just to do a deal. Like, please don't spend. I've heard you say it, Paul. I've heard a million folks say it. We say it all the time. Like, there are lots of neighborhoods that are doing quite well. Even the neighborhoods that historically haven't seen the same appreciation, we're continuing to see continued development. There are a lot of wonderful suburbs on both from the New Jersey side and the Pennsylvania side that we still continue to see a lot of action. So, I mean, we're lying to ourselves if we say that we haven't seen a bit of a cooling and a bit of a leveling off as far as pricing. And we think so much of that can be attributed to the rising interest rate environment that we're currently in. Nobody knows what the Fed, well, a lot of folks are betting on what the Fed's going to do next, right? But like long term, we don't necessarily know when interest rates are going to, be capped and then start to ease and come down a little bit. A lot of economists think later this year. So I know that was a really long-winded answer, but I think the short answer is nobody necessarily knows what's going to happen tomorrow. So I think the best thing you can do is control what you can control and make sure that you're doing your due diligence before investing.
Yeah, no, I completely agree, man. That's absolutely 100% accurate. Nobody does know. I could tell you how I listened to somebody sit there and say, well, there's still, 50% less homes on the market than there were pre-COVID.
Yeah.
So whenever we actually do hit rock bottom in the economy and that Fed decides to lower the mortgage rate to kind of boost up the economy, well, guess what? There's no homes for anybody to buy. So what's going to happen to prices? They're going to go back up.
Right.
And then I can tell you about the other guy that I listened to on the other side of it who sat there and said, there's no way we're coming out of this. Everything's dropping 40% off the back by 2024. Yep. Right? I don't know. But to me,
Paul, the answer is probably somewhere between, right? Yep.
And that's why I'm just saying, my answer is it's never a bad time to buy real estate. As sad as it is, the worst time was yesterday. The best time is today. You got to just buy it. It's something, but to your point, not just to buy it. It's not any deal. But if you analyze it and you get that paralysis, yesterday was a better deal than it was today.
Yeah, a good deal is still a good deal. A good project is still a good project. Yep. Make sure you make money buying it right and having all your contractors lined up. And if we don't see continued appreciation over the next 6 months, you're not going to win or lose your next project based on what happens. It's very unlikely that you win or lose your next project based on what happens in the market. Most of it, you have some control over. To my previous point, what are you buying it? Are you buying correctly? Are you budgeting correctly? Are you doing your due diligence? So it's very rare that a deal is won or lost based on external. And now, is it a little bit? From time to time, is it more competitive? Is there a little bit less demand in the marketplace? Sure. The pendulum's going to swing, but a good deal is still a good deal.
Yep. No, I think where I see most investors really fail is that ARV that you mentioned. They'll sit there, they'll look at recent comps. Recent comps right now are 500,000. That's great. You have a 6-month project, and that 6-month project is going to push in new comps into that. So to me, I always tell my investors, hey, listen, if today's comps are 50,000, let's work off of 475, 465, somewhere in there. Because if we hit that 500, that's your bonus. That's your cherry on top. If we go over, hey, that appreciation is the true sprinkles. Don't ever don't ever count the market to stay even or go up. Me, I'm always a pessimist on it, at least when it comes to my numbers. Yeah, I want to make numbers. I always tell people, take that buffer. And that goes right back to what you said before. Yeah. Make that buffer zone, however you want to build it in. But dude, that's great advice out of it. I got a couple more questions for you before we wrap up.
Sure. Let's hear them.
These are more personal out of it. Other than walking on crutches recently, what are you doing this year that you weren't doing last year?
Ooh. Yeah, it's a good question. I think Paul, I'm going to continue to hammer, have as many conversations as you can. I think every year I realize I don't know what I don't know. There are so many different sides of this, right? It's tax season, right? So accounting, the legal aspect, a good real estate, having, the ability to reach out to a good real estate attorney, the lending portion, the lending side of it, relationships with your wholesalers. So, me personally, as I try to become a better real estate professional, I'm just trying to continue to have more conversations, meet more folks like you and like CJ who have different perspectives. So I think I would definitely encourage folks, and what I'm trying to do is I'm trying to spend more time, taking a coffee meeting or a Zoom meet. Right now, it's hard for me to walk coming off my surgery. So carving out time for things like this where I'm telling, but I'm also learning. I listened to a couple of your pods. That's a great thing that you can do. I mean, it's really easy to squeeze in a 20 or 30 minute podcast, especially if you listen to it at 1.2 or 1.25 speed, right? While you're driving, while you're going out for a walk, while you're idling in the car waiting to pick up the kids. It's really just encourage folks to have more conversations, get more involved in the community.
Dude, that's such a cool little hack that you mentioned there that most people don't do. Listen to podcasts on 1.2 to 1.5 speed. It is such a game changer. trust me, your ears will adjust to it and they start listening to it
Mhm.
as normal. And then somebody else turns on your phone and you're like, what are you doing over here? And you're like, hey.
I'm a little nervous, Paul, because I know one of my drawbacks is I know I speak a little quickly sometimes, so I'm a little nervous to re-listen to this podcast after it drops and hear what I sound like on 1.2. But to your point, I think your ears do adjust quickly, and podcasts are, one of many amazing resources out there. Whether you're reading, talking, listening, meeting with folks, it's really, really something that I'm trying to do more of this year as compared to in the past. And something that I encourage folks to do. And you're going to learn. You're going to learn to like it more. You're going to become a stronger real estate professional by doing it.
So your piece of advice that you could give to a younger version of yourself, any investor, any developer, any money person, just somebody who's looking to start out, what's your advice to them?
Yeah, that's a really good question, Paul. I'm staying on the same tree, man. I don't want to deviate too much. I don't want to deviate. A lot of great for folks in Philadelphia. I'd actually recommend getting involved with a local, if you are interested in real estate investing, and learning. And when I say real estate investing, I mean, specific investors, the folks out there buying the properties, doing the work, flipping, selling, holding, whatever. I would definitely recommend getting involved with a local RIA. There's a great one that I've attended. I'm going to give a local RIA plug here. I didn't even plan on doing it, but there's a great one down at the Sofitel Hotel that's held bi-monthly, that Nick Tang and a bunch of folks run. I haven't been there in the last few months because I've been on crutches and I'm just getting back to walk, so I'm gonna be starting to pop back in a little bit more this spring. But whether it's that local, when I call it a RIA for folks who are a little bit newer, real estate investment association, they're in all different. Whether you're listening to this in Philadelphia, in the Philadelphia suburbs, in New Jersey, or in a different city across the country, this is one of the best places to these RIA groups are some of the best places to meet other real estate professionals. You're going to meet other investors. If you're an aspiring investor, you're going to meet other aspiring investors. You're going to meet wholesalers. I pop in from time to time. I work for a lender. You're going to meet all sorts of different real estate professionals. Best thing you can do is show up, network, introduce yourself, take a leap of faith and pop in. I know everyone's there to help. Real estate is not a zero-sum game, right? Like there are I see so many people looking at this where, oh, well, these guys win and these guys lose. Is like we can create an environment here where a lot of people do well and a lot of people win and a lot of people share resources and share best practices. So I guess my advice to my former self, and I had a career before real estate. I've been with Fund That Flip now for nearly a few years, but like what I would have done a little bit more in the beginning is just I tried, but you can always do a little bit more and get more involved and meet folks in market. And that's my advice to my younger self or a younger version of me. And it's never too early or it's never too late to get started. I can't tell you, Paul, how many times I've heard folks say, well, if I just started in my 30s instead of my 40s.
Yes.
And then I hear folks in their 50s say, oh, I just started this in my 40s instead of my 50s. And then I hear folks in their 60s, if I just started this in my 50s, like it's never too late. Have a game plan, have a nest egg, do your due diligence, ease into your first deal and make sure that, you've looked at it 6 ways in every direction, but it's never too late to get started. So if it's something that you're passionate about, the resources are out there, the people are out there to help. So I guess my advice, that my very long-winded at this point, long story long at this point, my advice is to find these local groups, make local connections, and it's never too late or too early to get started.
No, you're absolutely right. I mean, and nowadays with the ability with companies such as yourself, Fund That Flip, you could scale really fast as well. So
yeah,
if you did wait to your 50s, man, you in 10 years you can scale like somebody did in their 20s all the way up to their 40s. Like you can do it. And again, you guys would be that leverage that they could use. Fund That Flip would be right there, ready to help them.
I can't tell you. And now the folks who do this, I'm going to make a quick caveat by saying, like, the folks who do this are the ones who are prepared, the ones who are doing the work, like the ones who are grinding before they get started. But I've heard there are so many stories and anecdotes that I can pull on from my last few years at Fund That Flip, where I learned that someone scales from, they do one property and then they might do 8 in the next 2 years. They might have done 20 in the last 4 years. Like, if you're doing it correctly and you're making good decisions, it's not for everyone, right? Like it's hard. It's not going to be easy. I want to stress that, you got to put the work in, but you can leverage capital like ours or other similar companies to help grow pretty quickly if done correctly.
So that's awesome. Antonio, you've been awesome today. I really do appreciate you coming on. Unfortunately, that is the end of our show today. That's all the time we have for the Atomic Real Estate Show. I would like to give a huge shout out to Fund That Flip for allowing Antonio to join us. Thanks, buddy. You breaking down your knowledge into atom-sized bits of information for our guests is awesome. Really appreciate it. I personally learned a lot today out of it. I'm going to take action off of what you said today. I hope our listeners are going to take action off of it as well. This has been a Direct Subs production. Please visit them at directsubs.com. Again, Antonio, thank you. And actually, before we go, how can our listeners get a hold of you guys?
Yeah, Paul, absolute pleasure. Appreciate you having me on. Tell CJ I said hello. It's been probably about a year now since we grabbed coffee down in East Bastion, so please tell him I said hi. I don't have the biggest social media presence, but what I've got like a little Instagram account where it's more of like our friends and family hanging out and Twitter and all that fun stuff. But for anyone interested in connecting about real estate investing or anything real estate related, email is probably the best way. You can reach me at antonio.campanelli. I think hopefully in the show notes or something, Paul
we'll put that in the show notes. Don't worry.
Yes, there we go. Antonio.campanelli at fundthatflip.com. If anyone's interested in learning more about the passive investing side on the crowdfunding platform where I spend my time currently as a professional, you can reach out to us at IR at fundthatflip.com, IR standing for investor relations. And yeah, I hope to looking forward to hopefully being connected with some folks through this podcast. And Paul, I think it's great what you guys are doing. I think to your point, there is not a lot of local real estate podcasts. So wish you guys the best and thanks for having me and let me tell our story a little bit.
Antonio, I appreciate it, man. We're definitely going to have you on. Thank you, everybody, again for listening. Please check Direct Subs out at directsubs.com. Be 1% better today.
If you enjoyed our episode, please consider supporting the show by rating and reviewing the podcast. Also, check us out on Instagram at Atomic Real Estate Show to find out when new shows drop and to participate in our community Q&As. The Atomic Real Estate Show was brought to you by Direct Subs. Direct Subs is the #1 place for real estate investors to connect with local contractors for their flips, rentals, renovations, and new construction projects.